This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil with Invest Like a Pro, and on this channel, I like to take price structure, look at moving averages, look at the price action itself, the individual bars. I also like to look at the MACD and ADX and volume, and I look to do that in a single time frame. And then if I can understand what's going on in a single time frame, and then look at it in multiple time frames, starting with a monthly and working my way back down to an hourly chart, I think we can get a pretty good idea of what's taking place in the market, where support and resistance is, and what kind of momentum we have in place. So that's what I try and do. And I like to do a market update on Fridays. So this is through Thursday night. I'm actually doing it Thursday at the close for a post on Friday morning. So let's go ahead and get into this. I'm going to start with the spider. And we've been talking about the fact that the market has been respecting the 18-month line and the fact that people got too bearish at this low. The investors' intelligence sentiment numbers got down to a negative number, which means there's more bears than bulls. That doesn't happen all that often unless we get major bottoms in place, and in most cases. Now, it doesn't mean it can't get worse. It's possible it could get worse. It's just the vicinity of where this turned right at the 18 months just leads me to believe that we're probably not getting ready for a big major decline right away. Let me go ahead and bring up this weekly chart. What I think is important to recognize is that we went through this decline phase to the downside, and we had some pretty strong selling associated with it. So this red DI is showing the strength of the sellers, and the blue line going up is telling you how strong those sellers are. When it gets above 25, that's pretty strong selling. So that tells me that the trend, this is going to have a very hard time turning on a dime and going straight to new highs. So I would say that there's pretty good resistance overhead, okay, from that standpoint. Now, what I just pointed out was the fact that we have support underneath from the 18-month line and the fact that people got too bearish. So what's the high probability? The high probability is a little boring. It's more like range bound, okay? I mean, I think that's where we're headed. Now, I want to look at, there's two different things going on here because we have a lot of selling pressure based on the ADX, but the MACD is turning right at the zero line. And that's usually a positive. But if we're going to turn up, if we're going up and we're going to break out again, then I would think what we're going to do is something like that. I mean, some kind of a retest of this area. I don't think we're just going to tear through a declining 18-week line. You see how this 18-week is declining? I don't think we're just going to bust through there and just keep going straight up. So what I mentioned last week is we could fail at the 18-week, come down, make a bottom, and turn back up, or we can push through it and then come down, maybe still overrun it, but we need to see this 18-week starting to cup around. So that's really what I'm on the lookout for. And these indicators kind of support that. I mean, we had decent volume showing up at the bottom. We had, again, we have the MACD supporting some kind of a little turn here, but the ADX is telling us don't expect new highs right away. Now, I have not given any credence to the potential for the market to just be a bear market rally and we're going down again. So I guess I ought to give that some credibility. I mean, I'm not saying that can't happen. I just think it's a lower probability because we reached the sentiment number that we did and because we got such a good reaction off the 18-month line. I think it's more likely that we spend a little bit more time going through a distribution phase. I talked about this a few weeks back. I'd actually like to see, I think if this is going to top out and be a bear market top, then we consolidate here, and especially here on the monthly chart where we get some kind of consolidation. And then when we break through the 18-month, maybe a couple months down the road, 2 to 3 months down the road, then you have formed some kind of a top here. So that's what we have to be on the lookout for. And what I'm doing with my subscribers, I'm basically telling them, look, every weekend I go through and look at these individual charts. I do 400 or 500 over the weekend, and I go by sector, and I'm really evaluating to see if it's improving or if it's deteriorating. we should be able to see it. If you go bottom up, if you're a stock guy going bottom up, instead of looking at the indices and you look at what stocks are inside of the indices, I think you have a little bit of an edge. So that's why I like to do that. Let's look at this daily chart, because last week I mentioned the possibility, I really didn't know that that we could exceed this and then reverse, as opposed to the zone of resistance was between 4,500 and 4,600 for the S&P. So that correlates to right in this zone, right in here. And frankly, I really didn't know. And I was looking at the ADX, and the ADX on the hourly chart was pretty strong. So we ended up getting through that high and exceeding it. Now we're going through the pullback, and I think we're going to probably work our way back down closer to the 18 and the 40 day. What we want to see now is the strength of the sellers. I mean, this is a pretty ugly finish to the day on Thursday. So now we want to see how strong. Let's go to the hourly. How strong is the selling pressure? Because right now the ADX really isn't that strong. We got a little red DI showing up, but if we can form some kind of a bottom in here soon enough, then this really isn't that bad, because we had a pretty good reading to the upside. So I'm looking for a sign of real selling pressure. We're still above the zero line on the MACD on the hourly. So if we can come down and do some kind of a reversal pattern, maybe MACD holds the zero line, or maybe it overruns a little bit and then starts to turn around, then we might be on the lookout for another move to test highs a little bit more. But what makes more sense to me, because I've been thinking range, is that maybe this is going to be a little bit of a hard pullback. It's going to look a little ugly on the hourly, and we end up spending more time in a range. And maybe that range is 440 is kind of where support comes in, but it could come down to maybe a little bit lower, 434 or something like that. And I think we've got pretty good resistance up here at 457-ish. So, I mean, we're watching. We're going to watch this hourly, and the hourly is going to kind of dictate, based on the strength of the momentum, how much downside we have, and whether this is going to be a higher low that's going to push to a new high, or whether we're going to end up forming a range, maybe overrun these moving averages and kind of turn into a sloppy trading range for now. I think it's important for me to go and look at this QQQ, because I do think it is a little bit different. So this had more overrun on the monthly chart. It has a MACD that rolled through its signal line, and the MACD signal line is rolling over as well. So that's on the monthly chart. That just tells me there's a lot of resistance up there near those highs. It's a lot different than the spider. The spider didn't have that. And so I'm leaning towards this being under a little bit more pressure, especially because when we look at this on the weekly chart, it didn't really push through the moving averages. It actually rallied up to, and it looks like it could be failing right at the 18-week. Now, we haven't finished the week off, so we got another day here. We're going to have to see how this plays out. But the same thing holds true. I think there's pretty good support at 320. Is it going to go tearing through to new highs? I think that's a very low likelihood. Is it going to go busting through 320 to the downside? I don't think right now. But if we fail right at this 18-week and start down, then this has a lot higher probability of taking out this low than the spiders do. So we need to watch this and this reaction here over the next 2 to 5 trading days. Same thing holds true on the daily chart. We rallied up and kind of in a minor way just exceeded that prior high, and now we're coming back down. I think we're going to come down into this zone around 350 near the 18 and the 40 day, and how it reacts there will be very important. You don't even have to look at the hourly. You could look at the individual bars. If we get big red bars here, if the size of these bars are growing and they're mostly red, then there's a pretty good chance we'll overrun these moving averages. You might have one bad day in here or something like that, but then if they start to get smaller or they turn green as we're approaching these moving averages, then you could be on the lookout for, again, another rally back up. Again, I'm not really expecting any kind of a breakout or anything like that, but it is possible that we could come down and make one more minor new high into the bigger resistance up here. So that could happen for either one of those indexes, but we want to key on the momentum of the hourly at this point. I think, and see how this plays out. Does the zero line break to the downside on the hourly? And then I think you can also focus on the individual bars plus the volume. See, if you notice, today was not a good day for the market. I mean, it was down 1.25% for this index, but you see the volume? The volume is one of the lightest days of the last three. In fact, it is the lightest of the last three. So that's not, I mean, to me, that's not really a sign of significant distribution or anything. This could just be a test for another rally back up. The only other thing I did want to take a look at is Bitcoin. I'm going to switch this to a 4-hour. So, there's been a lot of talk about Bitcoin here, and I thought it was worth discussing for a few minutes. We have come down and found support at the 18-month line, but notice the velocity of this decline. Do you see how violent this move was? That was ferocious and a lot of red in there. So think about it more in terms of retracement. I don't think we're going straight up through, but we could retrace. And if we looked at a 50% retracement, yeah, well, we could be looking at something up in this region, maybe up in the mid 50s or something like that. So I think you got to keep that open as a real possibility. I just would look at it more like a trading play as opposed to the start of a big leg like we saw the last time, or certainly like what we saw here. I mean, this is nothing like that. I don't think we're ready to do that yet. What I would do, though, is key on this daily chart. You see how we broke out and now we're pulling back? This is going to have to hold this 44,000 area, I think, on a pullback. And you use a 4-hour chart instead of a 1-hour chart, and we're going to look for an opposing trend trigger down near that 44,000 area and see if this cups around and gets a zero line reversal here. Pretty nice reading to the upside. The only other thing I wanted to mention about Bitcoin is the fact that it did get through its 18-week. So normally when you have a declining 18-week and you break through it, you don't just keep going. Okay, normally you're going to come back and test that in some way, shape, or form over the next week or two. And that's why I'd be keying on how this daily reacts. It could just kind of consolidate and pull back over the next week or so. And that could set up a combination where you're sitting above an 18-month line that's rising. You get an 18-week that's starting to flatten out. And now we're pulling back to a rising 18-day. So we want to look for that. And then the trigger would be off the 4-hour chart. Okay, so anyway, that's the update for the week. Go ahead and post any questions or comments. Thanks.